After 6 years of trading, I've pretty much made every single mistake that you can make. But now I'm making withdrawals like these, and of course, producing results for others like these. So, in this video, I'm going to give you the 5 biggest mistakes to avoid if you ever want to cross the land of profitability. Stick around because the last one was a game changer for me. Let's get right into it. Part 1. Trading without a well-defined plan. The number one mistake that I've personally made and that many of the premium members I talk to have made is not having or sticking to a clear, defined trading plan. Trading is a game of probabilities. In other words, it's riddled with what-ifs in an uncertain environment. Look, if you're uncertain about your trading plan, you are just piling onto the emotional struggle you will experience while trying to execute a trade. So, how will you get around this? Journal every single trade that you take. Have a clear trading plan written down somewhere and have objective entry, exit, and trade management criteria. Executing the trade should be effortless. At the end of the day, it's just pressing a buy or sell button. The hard work in trading is all done via preparation. A trading plan is supposed to make trading stress-free. It takes the guesswork out of the whole process so you can focus on flawlessly executing and managing the trade. In the very next section, I'll give you some guiding questions so you can develop a unique trading plan for yourself and share with you the elements that a good trading plan should have. Part 1A. Elements of a good trading plan. I truly believe that all good trading plans should fulfill the following 5 steps. Step 1. How do I determine my bias? This is where you ask yourself, what strategy am I using and does this market move make sense? Step 2. How can price move in line with my overall bias? Here you can ask yourself, what is price currently doing to fit my bias? And how can I create a smooth flowing story with price movements? Step 3. What are my entry criteria? Great. Step 1 and 2 are done. Now, how are you going to enter the trade? What confirmations are you looking for? What time frame are you looking for these confirmations? Step 4. Where am I going to exit or take profit? Now that you know where to enter, good stuff. Now, where do we exit the trade? What is a good take profit point? Where should the SL be placed so I ensure that I mitigate further losses? Step 5. How do I manage my risk in this trade? Lastly, where should I take my partials? Where should I go break even? If price does X, how am I going to react? If price does Y, how am I going to react? Now, let me show you how I put it all together in one cohesive trading plan. I will run through it slowly, step by step. So pay very close attention. This is the Nasdaq futures chart. Step 1 is to identify my bias. On a monthly time frame, I can see a bullish fair value gap and a rejection off of it. These are 2 strong bullish indications, and I can also see an all-time high that I can target. On the daily time frame, we also look extremely bullish, and we are already very close to the all-time high. So I lock in my bullish bias. Step 2. How can price move in line with my bias? On the 4-hour time frame, we have a bullish fair value gap. I can look to take a trade off this bullish fair value gap with lower time frame confirmations to target my overall bias. Step 3. My entry criteria. In this case, I'm simply waiting for a 15-minute fair value gap higher than this current 4-hour fair value gap. Once I get it, I will simply place a buy limit at the high of the fair value gap. Step 4. My stop loss will be placed below the swing low and my take profit will be at the all-time high. Now for the last step, step number 5. If price prints a further bullish fair value gap, I will shift my stop loss to break even. I will also take out a portion of my position at the previous month's high, also better known as partials. Now let's see how this trade plays out. Great, we print a further 15-minute fair value gap here. So I will shift my stop loss to break even. Next, price eventually hits the monthly high, so I'll take a part of my position here out as partials. Finally, price hits my take profit. And with that, let's move on to the next part. Part 2, overtrading and lack of discipline. The next thing that really destroyed my trading was a lack of discipline leading to overtrading. This stems from 2 main scenarios: psychological struggles or a lack of a clear trading plan. You don't actually know a well-defined objective trade setup. You think you're following a plan, but you're not, because you're taking random trades. The most successful traders I know are like snipers. They patiently wait for their setup, and when it comes, they execute fearlessly. One shot, one kill. The worst traders I know fire off their trades like a machine gun, spamming buys and sells and eventually leading to psychological fatigue, poor decision making, and even busted accounts. If that sounds like you, don't worry. I used to be like that too. Over time, I learned that being successful in trading means maintaining a structured approach and sticking to a plan no matter what happens. In an environment of uncertainty, the trading plan is the only thing that we have as traders that we can be sure about. Part 3. Emotional and impulsive trading. Another big mistake is emotional trading and impulsive decision making. Now, I'm not trying to say trade like a robot. In fact, that's a common misconception that I feel traps a lot of traders. If profitability comes from trading like a robot, why not just use an expert advisor or robo-trader? Think about it for a second. If that really worked, then surely every single trader worldwide wouldn't need to care about learning technical analysis and emotional management. They can just take the easy way out, right? Why do you think the best traders in the world don't use such robo-traders? Because they just don't work in the long run. Here's what you should do instead. Embrace your emotions. Ask yourself questions like, how are you feeling before taking a trade? Are you feeling anxious or nervous about this idea? Why do you think that is? Or how are you feeling when you miss a trade? Do you feel the FOMO getting to you? Simple guiding questions like these can change your frame of mind. By catching yourself in the act before it's too late, you can break the cycle of emotional and impulsive trading before you press the button and then lose. Part 4. Insufficient risk management. I bet you all saw this coming, but there's a reason why this is so important. Risk management is the only thing that separates traders from gamblers. I personally fell victim to a few of these traps. Firstly, I didn't want to take a loss. Guess what? I didn't have a stop loss on my trades because I was too scared to see the trade close in red. This caused me to lose my account because instead of accepting my loss at an invalidation area, I effectively uncapped my loss and held all the way till my account balance became my SL. Sounds familiar? The next trap I fell into was using excessive leverage and poor lot sizing. When I signed up for my very first live forex account, I saw a 1:1000 leverage option available, and I thought to myself, oh shit, for every $10,000 in my account balance, I can trade $1 million worth of positions. That's 10 freaking lots, man. So there I was, placing 10 lots into gold and busting my account shortly after. $10,000 wiped out just like that. Don't get me wrong though. Leverage is great, but knowing how to utilize that leverage is important. Risk no more than 5% of your account balance if you're trying to compound a small account, and 1 to 2% if your account is slightly larger. So let's move on to the last and final part. Part 5. Trading conditions. Here's where it all changed for me. But first, let me start with a story of how I discovered this. When I first started trading, I got very comfortable with my trend breakout strategy. I was winning left, right, and center. At this point in time, I made over 40% of my account, which was only halfway through the year. All of a sudden, I started losing really badly. I checked my confirmations, checked my strategy, and everything was aligned according to plan. But I still lost. I wondered what the hell was going on. Only after going through all my entries and talking with my fellow traders did I realize that I was trying to trade a trending strategy during a range-bound time period. During the summer, there is a sudden drop in volatility in the markets, and most instruments are range-bound. So even though I saw all my confirmations, the characteristics of the market at that point in time were bound to make me fail. That's where I finally started to adapt. I made my strategies more flexible for different market periods, and I never stopped learning. Instead of my usual breakout strategy, I employed the same concepts to trade a ranging market. So as of right now, I have a profitable strategy to cover the whole trading year. I made my strategies more flexible for different market periods, and I never stopped learning. With that, I'll end off the video here. If you found this video useful, do remember to like, share, and subscribe to the channel. Join me in my community of 57,000 traders worldwide by clicking this link down in the description below. Let me leave you with this. Your plan is here to make you profits. There are no overnight trading success. All you can do is stick to the trading plan and let the probabilities play out. Nick signing off.